I'm Charlotte McLeod with the Investing News Network, and here today with me is John Kaiser of Kaiser Research. Thank you so much for joining me today at PDAC. Nice to see you in person.
Yes, Charlotte, we've done several Zoom calls in the past couple of years. It's great to see you in person.
It's really nice. I'm glad you made it into the building as well. I know that's been difficult today. Yeah.
Don't have my badge yet, still waiting for the line to get smaller.
Oh my goodness, but it is busy and we have a lot to talk about today. So you were telling me just before we got started that one of the topics you're focusing on right now is this lithium boom 2.0. So that sounds very exciting to me. Can you tell me what you mean by that?
Well, we've had two lithium waves. The first was 2008 to 2010 when people started thinking about electric vehicles, hybrids, and lithium-ion batteries. And there was a company called Canada Lithium which attempted to put the old Quebec Lithium project into production, but it ended up in bankruptcy. So that was kind of a negative for the Canadian lithium story. Then came 2015 to 2018. That's when we had cobalt and lithium, all these battery metals suddenly become very topical because that's when Tesla started arriving on the scene. And so there was this big round of enthusiasm, and the Australians woke up and said, wow, Western Australia full of these pegmatites. And they did what juniors are supposed to do. They mobilized new supply, which by 2018 had overshot the electric vehicle demand needs. So the price collapsed from $12 a pound lithium carbonate all the way down below $3, where none of these things really work. And Nemaska, which was the Quebec Whabouchi lithium play, it had bad timing because it didn't have enough financing to complete, and all of a sudden the price of what they were going to produce was just going to be a money loser. And during this period, we also, of course, had the Trump administration telling us that climate change is a hoax, fossil fuels have nothing to do with it. I'm lowering fuel efficiency standards, I'm gutting the EPA. And when he got booted out in November 2020, all of a sudden there was all this noise about the electric vehicles, the car makers. They had ignored all this stuff entirely. They had really ramped it up. So we all kind of woke up and said, oh, this EV stuff's happening much faster. And so that's when you saw the more advanced brine companies and the better pegmatite ones take off, do really well. There's been Chinese buyouts. The Chinese understand they're committed to EVs because they want to get away from oil import dependency. And all this was shaping up really well. But then the question became, oh, how much do we need? So Rio Tinto did this presentation in September last year where they showed that by 2035, we need roughly 1 million tons of lithium metal equivalent supply to make this EV explosion a reality. And what was it in 2021? It was 100,000 tons, and they identified another 100,000 tons in the development pipeline. So where's this going to come from? The main thing is the brines are going to come up with a big chunk, and Australia's pegmatites will add more, but that probably still will take care of only half. So Eastern Canada, which had those two disasters there as a black mark against it, it's actually the same sort of setting as Western Australia. And we have Tanco in Manitoba, which is also a world-class deposit that's sort of been pretty much destroyed as a mine because it was mainly mined for cesium and tantalum. But now we see this awakening. We got to go through all of Eastern Canada, and most importantly, it's waterlogged. As temperatures rise, water is going to be a problem. Lithium Triangle is such a good place because it is a dry place, and water supply is going to be a problem with the expansion. And Western Australia is also a dry place, but water is not a problem in Eastern Canada. So I'm bullish. I'm late to the game. This is the third wave, but I've now excited, and it's a gateway for young people because it teaches them how this resource sector works, and it allows them to make 10, maybe even 100 baggers from what will probably be a couple hundred juniors getting involved in this game as they realize that lithium mania 2.0 is real.
Okay, I think there's a lot of topics that we can go down there. One of them, I have this feeling that there's a perception of the lithium market that it's hard to understand. You know, you might not be able to just look up the pricing. different deposit types. But I feel like you are going to tell us, no, you can actually understand this fairly easily. So what's your perspective there? How can people understand this better?
That is a very valid problem because, lithium carbonate has its own little formula, lithium hydroxide, which is sort of the preferred battery grade version that the battery makers need. It has another formula. Grades are reported in lithium oxide, Li2O, and of course sometimes in elemental lithium. So you have all these numbers. How do you convert them into a rock value? And at $30 a pound lithium carbonate, you can find the little the conversion ratios, and you can work it out. And a lot of these things are now $2,000 a ton rock value. That's insane. But cut that back a third, you're dealing with $500 rock value, and then of course the discounted cash flow model, because this is not like gold where you fantasize about it going up, up, up and away forever and create value that way. People don't know how to set up these models and value it and put in all the variables. But that's something that I specialize in. I think the younger generations are not as uneasy with number crunching and stuff as the older generations. So I think when they start getting their head around the basic formulas of how do you quantify the size of these prizes and look at drill results and convert and say, holy mackerel, and learn how to do a simple volume calculation, because these pegmatites, they're lenticular, dike-like, tabular. They're not squirrely things like orogenic gold deposits where you get endless high-grade drill assays, but how do you even make it hang together? Now you just do little rectangles multiplied by the specific gravity. The young people will figure this out really quick. So I think the pegmatites are beautiful for assessing the potential value and overcoming this hurdle that is real. But when you understand the scale of the potential and the need, the will becomes there, arrives to overcome these obstacles.
Yeah, so I totally agree. If there was going to be a gateway for young people to get into the mining industry, it's got to be probably something like this. But I would worry that people look at this and say, well, why would I not just invest in like a Tesla or some other clean tech angle? So do you think this is really going to draw people in?
Okay, so here's the thing with Tesla. Tesla is priced as if it's going to own the future car fleet, and it's not going to own the ICE car fleet if we stay with ICE cars. It's going to own all these EV cars that are made. So without this lithium becoming reality, Tesla goes to a buck. It dies. It just becomes this producer of vanity cars like Ferraris or something like that maybe the one percenters own, and everybody goes back to internal combustion engine cars. So that's the situation with the a Tesla. There's no upside. There's only downside. So if you like your Tesla, if you're like one better off young person, look at the lithium, because that's where the upside is. And what people don't understand is that the demand for lithium, I was talking about earlier, like even 100,000 tons a year, it used to be like 10,000 tons a year. It was all for glassware and ceramics, and then the laptops and cell phones came in. But the lithium requirement for electric vehicles is so huge. And if they actually have a technology breakthrough and deliver a solid state electrolyte that allows lithium metal to be substituted for graphite in the anode, then you get a really, really good lithium ion battery. And none of these projections of requirement assume this will ever happen. So if this should happen, then those numbers that Rio Tinto puts out are chump change compared to what's needed. So you can't, of course, have like $100 a pound lithium carbonate, because then the car's not affordable. So it has to be down there. So this becomes a game then of all these juniors finding these medium-sized deposits, upgrading them, and the big guys eventually acquiring them. So when you're starting with almost like no knowledge whatsoever about this, you can make a 5-10 bagger really rapidly. And we've seen that with a company, Patriot Battery Metals, which owned the Corvette project in the James Bay area. They had gotten into it during the 2015-18 boomlet, and then of course when lithium collapsed, price collapsed, that nobody cared about it. But now they've gone in there and done a proper drill program and are getting wide intersections of 1 to 2% lithium oxide, suggesting that this is a substantial resource. So this thing's gone from doing a 16-cent financing a year ago, it's been as high as $4.50 a share. If I'm even as a boomer, that's the kind of stock I want to own. And this, I think, will repeat itself over and over. So play a statistics game, look at this sector, see who's serious, put together a basket of these lithium companies and treat it like a Silicon Valley startup portfolio where they have dozens of high-risk startup stories. Only a handful of them will be superstars. There'll be a handful of super duds, and then there'll be a bunch of sort of also-rans in the middle. You can't invest in these private equity funds in Silicon Valley, but here in this space, you can. So that's why you would look at this, take these juniors serious, rather than sit there and hang on for Tesla, because really with Tesla, you're waiting for reality to catch up to the valuation. And right now we're seeing a skepticism emerging that maybe this won't happen, and Tesla's way overpriced.
Yeah, so people need to take that a little step further beyond Tesla. I think if we're talking about lithium, we also need to talk about this report that came out recently from Goldman Sachs. They were pretty bearish. They said the battery metals bull market is over for now. I know that most people who follow the space don't agree with that. What are your thoughts on those comments?
I haven't seen the report and the basis for what it's about, but to these prospects, these pegmatite potential prospects in eastern Canada, they're undiscovered, or they're showing up as little white patches. You're going to have to peel back the moss and show how big they are. You're going to have to drill them off. The timeline to develop new mine supply is typically 5 to 10 years. It may be a little faster for this sector, for lithium. And of course, what has to happen in Canada too is the creation of lithium hydroxide refineries, because all these little mines are going to produce a spodumene concentrate, which will get trucked to the refinery where they pound it with acid and heat and produce the battery grade material. This does not yet really exist, but there's already plans to build these things. But those will take till 2025. So for them to actually have feed, there also need to be all these little projects moving along the exploration development cycle. So even if, right now I say lithium carbonate dropping back to $10, that's a good thing, because at $30 or higher, it ain't going to happen to the big EV build-up. But down here, between 10 and 15, these projects are still in the money, and well in the money, and it's worth pursuing this. So we could have this boom happening right now because its delivery is towards late this decade. That's why its timing is now. I see it as a 3 to 5 year boom. And it's not like the rare earth mania boom, which was all about just displacing Chinese rare earth supply. And then everybody was stabbing each other in the back, undermining each story, saying, yeah, yours got problems, never going to be able to take that piece of the Chinese supply that the Chinese won't give us anymore. No, even the Chinese in this game, they're freaking out. There's not enough lithium for all their lithium-ion powered cars. So I think it doesn't really matter what Goldman Sachs is saying about the short term, because the medium-term problem for these car makers and these dozens and dozens of gigafactories that are being built is you can't just turn on the tap and have lithium hydroxide come out of it. The planning and the support has to come for it now. Will lithium crash back to $3 a pound? Only if the world accepts that electric vehicles are never going to happen. Again, this is why I think it's exciting for the millennials, the younger generations, because they say, okay, well, you, John Kaiser, old boomer guy, you're not going to care. You're not going to be around to suffer all this, but I care. So I'm going to pay attention to this space.
Okay. I think that covers everything that I wanted to go over here, unless you had any final thoughts that you would want the audience to know about lithium or otherwise.
I see the lithium as an important educational gateway, because there is this movement afoot to reshore supply sources. When you look at where all these commodities come from. Of the 40 or so metals and energy commodities, 19 of them, more than 40% comes from Russia and China combined. And then there's another 10 where they represent 20 to 40%. And if this Russia-China alliance continues and turns into sort of autocracy versus democracy, sort of a divided, almost like a Cold War style of global economy, where stuff from the autocratic part doesn't flow back to the other. America, which has a tiny fraction of all this supply, despite being the biggest economy, there's going to be a tremendous surge in replacing this supply with domestic sources. And a simple example that everybody can understand is look at all the semiconductor capacity concentrated in Taiwan. If China annexes Taiwan, we have a horrific problem because it takes 3 years to build these multi-billion-dollar foundries to replace it, and they're doing it. So there's a big stalling game going on right now to try and just keep this stable. But this reshoring, this bringing back into safer jurisdictions, raw material supply, that's going to become a big theme. There's been lots of government blah, blah, blah talk about it, but at some point here, it's going to start being reality. And the juniors are going to become the engine for that because the big deposits in places like North America have been found unless they're very deep and blind. And that's expensive and long term. So I see a huge role for the resource juniors as being these companies that go in there and look a little deeper, rethink these old systems, and come up with medium-sized deposits that will replace what we might no longer be getting in a deglobalized economy.
Okay, well, I think we'll wrap it up there. Thank you so much for coming on to share everything that's going on in lithium.
You're welcome, Charlotte.
Thank you. And once again, I'm Charlotte McLeod with the Investing Is Network, and this is John Kaiser with Kaiser Research.